In lesson 2.2, we finally started taking transactions and analyzing how those are affected by T accounts. We're going to continue that in lesson 2.3, but we're specifically going to focus on the owner's equity accounts because we are going to add another T within a T. So we're going to have a T within a T within a T for our owner's equity accounts. So some quick review on owner's equity. We have three types of owner's equity. We have revenue, which is when we are adding to our owner's equity, and we have expenses, which is when we are subtracting from our owner's equity, and we have withdrawals, which is also when we're subtracting from our owner's equity. So revenue is any time in our transaction that we see the word sales or sold, and the specific account title is actually going to be sales. Expenses would be any transaction that might say the word expense, advertising, repairs, utilities, charity, telephone bill, or postage. And the account title will be that name and then expense. So it would be advertising expense, repair expense, utilities expense, charity expense. And then withdrawal would be anytime you see owner for personal use. We have to draw it out or take the money out for personal use because we have to separate business from pleasure. And the actual account title for a withdrawal is the owner's name, comma, drawing. So this is just a review. We already know about revenue, expenses, and withdrawals, but now we're going to take those T's and place them in our big T. So let's start with revenue. Again, revenue is when we add to owner's equity, and the transaction words are sales and sold, and the actual account title is going to be called sales. So here we go, T within a T within a T. So when we originally made our first accounting equation T of assets equals liabilities plus owner's equity, we made then the owner's equity T on the right side, and we put debits on the left, credits on the right. And for owner's equity, the normal balance that increased was a credit because that was closest to the edge, and the debit was what decreased. Now we're going to make another little edge. So we're going to shorten this edge, and it's going to be the green dotted line where we're only focusing on the right side of the equation. So we're going to place a T within the owner's equity T. So revenue, like I said, increases owner's equity. So we're going to go to the increase side, and we're going to draw a T account on the increase side. We're going to label it with the official account title, which is sales. And then we've got debits on the left, credits on the right. And now we need to figure out where we're putting that normal balance and we're increasing or decreasing within sales. So it's the same rule. I'm going to put the increased normal balance closest to the edge. So the new edge for owner's equity is the green dotted line. So I'm putting my credit and the normal balance on the right side, and my debit is on the left, and that's my decrease. Guess what? Nothing has changed. It's still a credit. Guess what else? Sales will always and forever, always and forever be a credit. It will never be a debit unless you made a massive mistake. Sales will always, always, always be a credit. So let's practice what this looks like with a transaction. On August 12th, we received cash from sales. So first, I'm going to ask which accounts are affected. I have my keyword of cash, and I have my keyword of sales. How do I classify each account? Well, cash is an asset, so we'll drop that there. Sales is an owner's equity. Specifically, it's revenue. So we'll drop that there. Remember, the sales account T is within the increased owner's equity T. How is each classification changed? If I receive cash, cash is getting a plus. And if I have a plus on the left side, I have to have a plus on the right side of my equation. How do I enter each amount? Well, cash increasing is a debit. And then I just told you sales is always, 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 always going to be a credit. Sales increasing is a credit. And debits equal credits, so I'm set. Another type of revenue transaction occurs when we've sold services on account. So which accounts are affected? My keyword here is on account. And now I have to determine, is it accounts receivable or accounts payable? When I've sold something to you, I should receive money from that sale. So my first account is accounts receivable from Oakdale Schools. And then my second keyword here is sold. And so that matches the sales. And now I classify my accounts. Accounts receivable is an asset, so I'll drop that T account under assets. Sales, again, is an owner's equity within the revenue side, which is an increase. So I've got my sales, it's within the increase side. How do I change each classification? If I sell something, I should be receiving more money, so I've got a plus. And if I have a plus on the left side, I should have the plus on the right side of my equation. How is each amount entered into my account? So an increase in accounts receivable is a debit. And again, sales increasing, always, 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 always a credit. So debits equal credits, and I'm set. Next up, we have received cash on account. So if I'm looking at my keywords, I've got the keyword cash, that goes with the cash account. And then I've got the next keyword on account, and then received is its buddy. So I've got accounts receivable from Oakdale. How do I classify these? Cash is an asset, so I'll drop it in assets. Accounts receivable is also an asset, so I'll drop the T account there. Notice that nowhere in this sentence does it say the word sales. So if it doesn't say sales and if it doesn't say sold, we're not worrying about owner's equity. How do I change each classification? If I receive cash, cash is increasing. And it means if I have a plus on the left side of my equation and I'm only affecting one side, I have to have the opposite sign. So accounts receivable is actually going to be a minus. They owe me less because they've paid off part of their bill. So now I'm entering this amount in the account. So cash increasing is a debit and accounts receivable decreasing is a credit. Debits equal credits, and I'm good. Next up, we have expenses. Remember that expenses are a decrease to owner's equity, and those transaction words could have been advertising, rent, telephone bill, repairs, utilities bill, postage, charity. The actual account title is what you're doing plus the word expense. Advertising expense, rent expense, utilities expense, repair expense. It's another T within a T within a T. So again, we have our little green line where we're focusing just on the right side now of the accounting equation. Expenses are a decrease to owner's equity. So we're going to place our new T within a T on the decrease side. So I'll drop that T in there, and then I'm going to give it the account title. So whatever it is, expense. Debits are always on the left, credits are always on the right. Now I'm determining which is my normal balance. Remember, the normal balance is closest to this new green edge. So my debit is my normal balance, and that increases, and my credit would be a decrease. This gets kind of confusing. So what I would like to say is that if I have an expense, I'm increasing the amount that overall my owner's equity is going to go down by. So it's going to go down by a greater amount when I'm on a debit, or it's going to go down by a lesser amount when I'm on my credit. Let's see what it looks like with an actual transaction. Paid cash for rent. So my first keyword here is cash. My second keyword here is rent, and the title is rent expense. So I'm going to classify each account. Cash is an asset. I'll drop that in there. Rent expense is owner's equity, and that's on the expense side. And now I'm determining how each classification has changed. Cash is decreasing because I'm paying it. And then owner's equity is also decreasing in the example of an expense. How do I enter each account in? Cash decreasing is a credit. And now if I go over to that owner's equity and I go over to rent expense decreasing is also a credit, but I'm not going to focus on the little guy. I'm going to focus on the T that it's within there. So it's within this debit T over here on the right. If I had put credit, then I would have a credit and a credit, and that's not okay. I have to always, always, always have credits equal debits. So when you are looking at entering it, always pay attention to the overall T here that's under owner's equity. Withdrawals is another change to owner's equity where we are subtracting or we are decreasing our owner's equity. The transaction word would be owner and specifically the personal use. The account title for a withdrawal would be the name, drawing. Again, a T within a T within a T. So we're focused just on the right side of the accounting equation. This is going to be super, super similar, the same thing as we just saw with an expense. So withdrawal is also a decrease to owner's equity. So we'll drop our new T account within the decrease portion of owner's equity. Then we'll say that this account is titled name, drawing. Debits on the left, credits on the right. And my normal balance is closest to my new edge, which in this case is the debit side. So normal balance increases, credit decreases. Let's see what this looks like with a transaction. Paid cash to owner for personal use. I've got my cash keyword. I've got personal use as my next keyword, and that means it's the name, drawing. Cash is classified as an asset, so I'll drop that over there. The drawing account is a type of owner's equity, and it's a withdrawal. So that goes in the lower side of the owner's equity account. How do I change it? If I'm paying cash, cash is decreasing. A withdrawal is always decreasing, so I've got a minus on the left and a minus on the right. And now I'm determining whether or not I have a debit or a credit. So cash decreasing is a credit. Here it is. If I have a credit, I have to have a debit. So again, we're looking at the top level here in the T. So drawing account falls within the decreasing T. And I'm set. Debits equal credits.